investments are appropriate for every individual. Investor Signals provides a broking account service which includes our model portfolio of ASX 20, 50 and 100, also access to the US S&P 100 along with our ASX and US high conviction. We operate an independent portfolio where we can work in partnership with you to execute ideas that we jointly agree on, and we can utilize derivatives to enhance portfolio returns. If you'd like to know more about the Investor Signals broking account service, please call me on 1300 614 002. The technology that we're using tonight's the Investor Signals member area. You can subscribe to it for $1,320 for the year, or you can obtain a free trial by visiting investorsignals.com. The table up on screen is part of what our focus has been with determining fair valuation for US equities and a return to pre-earning levels of, say, 2019. This is the table we've been focusing on. So just to recap, in Q2 we've seen earnings fall roughly 30% in the S&P 500. Now we're less than 4 weeks away before Q3 earnings results come through. The market's looking for a 20% pickup in earnings, and that's needed to support these lofty PE valuations. So these names down here, whilst we've seen some correction in these technology stocks, there's still a long way to go if there is to be any normalized level of PE valuations within these growth names. Important catalyst obviously is to see that the economic recovery is actually taking hold. I think if we were to see the Q3 earnings sort of flat on the same time as Q2, then that might be another catalyst for the market to have a further leg lower. The graph of the Nasdaq there, we'll take a closer look at this capturing Friday's close in the US, but essentially we have the market rolling over. It's below the moving average, and for the moment, whilst there seems a chance that we get a small technical bounce from where we are at the moment, the underlying issue of high PE valuations and low earnings growth is still not resolved. So let's move straight into a graph of the Nasdaq, and we'll just have a closer look at that pattern in the technology sector. For those joining us for the first time this evening, the leading indicator that we focus on for global growth at the moment is the Nasdaq. We've been mindful that the high stretched PE valuations are likely to correct. We're seeing the early stages of that. That has implications for some of the Australian technology stocks where we're seeing CAR, REA Group, Xero, Seek and other technology stocks under pressure. The moving average there is our reference point, simply just in case that the downtrend continues. You have a reference point to simply say keep some hedging in place in the portfolio whilst the market rate remains below that moving average. So to start tonight, what we'll do is we normally toggle through the ASX 100. Tonight I'll just take a slightly different approach. We'll look at a couple of lists tonight, and then next week we'll move back on to toggling through the ASX 100. The first list that I wanted to cover this week was coming into the watch list and going down to the recent Asx Signals. So this captures the last 7 days of scan results. So if we organise this with percentage gains to the top, we make sure that they're in buy order. And let's just move through and have a look at what the algorithms flagged in the last 7 days. So Macquarie Telecom, a little outside of our investment sort of universe that we focus on. But you can see here technically what's happened. We're starting to see volume pick up there at the lows. They're around that $38 level. The short-term indicators moving higher. You've got the primary algorithm buy signal, which is the green box down the bottom there with the eye. Also the arrow there pointing up from indicating that the shorter term momentum is also supporting the turn, and the stocks rallied from say 38 up to 42 there. So as I toggle through these, when I find a stock that I'm interested in, that's when I'll come across here and add it to the watch list, whichever one it may be that I want to store the stocks of interest. For me, custom list number 3 stores my ASX codes that I'm interested in. So it just saves you going into the watch list and typing the codes in. You can simply just hit that and send it to the watch list. Just Northern Star. So part of tonight's webinar will be focusing on the recognition that these gold names that we've been talking about on the forum and or on the blog and in prior recordings, we're now starting to see that support level in place and to move higher. So Northern Star, again, if we look at sort of the setup here, we've had the algorithm buy signal, the green arrow, the stochastics, so the fast lines turned up through the slow, bounced off that sort of 12.75 or $13 support level. So similar type pattern across Saracen, Newcrest, Northern Star, Gold Road Resources. And so in the case of Northern Star, this was flagged as a buy signal a few days ago, so just drawing your attention to the higher low there. Austal, not doing really too much there, but just highlighting there that algorithm buy signal at 310, and the short-term stochastic certainly starting to turn higher there. Pushpay, again, not doing too much there. It's not really sort of a stock that's on our radar, but you can see there the algorithm buy signals flagged the higher low formation, the stochastics turning higher. So from a trading standpoint, if you're looking sort of for ideas, being long this position with a stop loss below is something to think about. You know, we tend to focus on more of the higher quality names, and if you follow the blog, you'd be picking up on sort of that research that we tend to focus on the stocks that mainly ASX 100. So Oceanic Gold Corporation bouncing off support there at around 280. We haven't really started to see the stochastic turn higher yet, but we've certainly got the algorithm buy signals, the green arrow. Within the gold space, our preference still remains Newcrest and Gold Road Resources. So Cube Holdings, this is now switched to algorithm buy signals there, and the fundamentals support Cube trading higher, and I'll put some details together on the company valuation, forward earnings growth, and update a post on the blog tomorrow regarding Cube. Ansell, this is a shift to algorithm buy signals. This is an example of a stock with strong fundamentals, growing earnings at over 10% per annum, just under a 2% dividend yield, does trade on a high PE, but obviously a beneficiary of some of the added product demand or supply solutions within the COVID pandemic. So support there at around that $35, $36 level, stochastic moving higher. With Ansell, it'd be one that I'd look at selling a covered call over to, given that it is trading on a fairly high PE, but the downside risks are low there with Ansell. Spark Infrastructure, support there at around that $2.10 level. So again, this list is different to what we'd normally do each week, where we'd toggle through the top 100. What I'm looking at here is just the last 7 days of algorithm buy signals. So Coles we like, and this is one that I've detailed on the blog. So finding support there at around that 1675 level, moving higher. Again, if you're looking for income in the market, owning it and then selling the covered call over the top, you're driving sort of that from a 3% dividend yield up to about 8-9% per annum cash flow. Both Coles and Woolworths look attractive where they're trading at the moment. This is interesting that we're starting to see, so both the Shanghai index, the composite index, is under algorithm buy signals just over the last few days, and then the Van Eyck Vector China New Economy ETF has also come up as an algorithm buy signal. So again, if you're joining us for the first time, the benefit of the algorithm model really is that it's helping to identify stocks that are creating higher highs, higher lows, and starting to go through sort of a support level within that higher low structure. So it helps draw your attention to positive momentum within the market, for you to sort of further analyze. To cut down on the workload, we have the morning blog at 11 a.m. which capture sort of a blend of technical and fundamental analysis around the ideas that we're focusing on the most at any point in the market. So it's something you want to be trying to do is read that 11 a.m. blog. But worth coming into the software, have a look at the Shanghai Composite, have a look at the Van Eyck Vector China Economy ETF, also maybe the Tiger, which is the Asia. We'll have a look at that at the end, which is a beta share technology ETF. Also you got the iShares Asia Top 50, which diversifies away from sort of that technology focus a little more. But interesting that that's starting to come onto the screening at the moment. Wesfarmers, so this pullback from 50 back down to $45 looks interesting. Gold Road Resources, so this is a recent algorithm buy signal around that 150. We obviously like that. ResMed, I've spoken in detail in previous weeks that we're looking for this just to move down more around that $22 level as an entry point for ResMed. Not there in OBL. Appen Limited, worth just pausing there. You can see I've drawn a channel between 27 and say 31. We're keeping an eye on that, but generally with the backdrop of tech stocks being overvalued in the US, any sort of trade in that area is probably likely to be a fairly short-term position in the market. And then back to Macquarie Telecom. So that's a scan list of the recent signals. What I wanted to do next is come down and toggle through the blog post. So these are stocks that are being tagged on the blog within the last 30 days. So this is a recap of the ideas that we feel sort of most strongly about in the market. So let's move through these fairly quickly. Tpg Telecom, I think buying this on the dip around $7.25 there. We'd expect this to find support, and as I've spoken about, the merger with Vodafone and the cost synergies that should come through from that acquisition, we'd expect to see buying support build there in TPG. Technology One, again, a little cautious on these technology names, but just draw your attention to the fact that it's under algorithm buy signals there at around that 750. Afterpay, we've been cautious on this, waiting for a deeper pullback. We'll revisit that as not yet under algorithm. So the last buy signal was back here at $30, and we'll just revisit this on the next time we see a buy signal. Pro Medicus, I updated a post on the blog today regarding the new contract wins that the company has announced. So whilst this stock's expensive, they are winning contracts with the largest hospitals, or among the largest hospitals in America. Earnings are growing about 30% per annum. So maybe urge you to have a look at the company's website, learn more about them, but support there at around that $25 level. Let's keep an eye on this stochastic and ensure that that continues to move higher, but the long-term fundamentals there are attractive for Pro Medicus. JB Hi-Fi, I've been cautious on this, waiting for a more substantial pullback, and we'll revisit that when it shifts to buy signals. A2 Milk's had a correction from $20 down to $16. Still, the growth metrics still look okay here for A2 Milk, so it's hard to kind of identify where the ultimate sort of support level is. We're getting close to roughly 50% retracement, maybe a little bit further to go, but I'd expect that we're sort of within $1 of that finding support on this current sell-off. Gold Road Resources, we like this as exposure to the gold sector, so support there at around 150, so both Newcrest and Gold Roads, but also maybe GDX as the ETF. The ASX, you want to add this to your watch list and keep an eye on this. Over the coming months, we're likely to see a good buying opportunity emerge. I've created a fairly wide channel there between 77 and 82. The long-term fundamentals for the business remain sound, but we are seeing a slight softening in the trading volumes. I updated a post on the blog about how the futures, or the derivatives volume in particular, were down about 30% on the same time last year. We know that the March pickup in volatility was probably was certainly a high point for volumes, and I don't think it would be any surprise to see the next 12 months earnings flat or slightly down on the prior 12 months, and that's probably going to mean that we start to see a bit of a low point in the ASX share price over the next 6 months, but ultimately that'll create a new consolidation range sort of at a lower price point, but we'd expect to see that hold within that consolidation range. So the story here really is back down below $80, buy it on the dip, sell at the money covered calls, and it becomes a good cash flow contributor to portfolios. CSL, buy this, sell covered calls is our strategy there. Coles Group, again, buy and sell covered calls. Sonic Healthcare, buy this and sell covered calls, and I'd highlighted on the blog there the entry opportunity at around that $31 level. Spark Infrastructure, we're not really doing too much there at the moment, just flagging that it is under buy conditions. APA Group, this looks like there's value on offer at around this $10 level, should still grow earnings, maybe not as much in the next 12 months as originally expected with the cost overruns that they've had, but the defensive nature of the business still should underpin 4 to 5% earnings growth per annum, starting again in 2022. So moving, APA probably rallies into the next dividend around that December period. So happy to buy it on this dip through here at the moment. Next DC, just flagging there that it's sort of under this short-term momentum turnaround here, but as we've discussed in previous weeks, have concerns around the accounting treatment here with Next DC, so it's not a stock that we're really active on. We're more watching that from the short side of the market. Sydney Airports, support that around 550, but we've discussed in detail lack of clarity or visibility on when earnings growth returns. Ramsay Healthcare, buy this, sell covered calls. It's a defensive way of driving returns for portfolios. Ansell, support there at around that $35, $36 level, and again maybe let it move up a little higher around that 38, 39, and then think about selling covered calls or simply just trade out of it. Bega Cheese delivered a good earnings result, but in particular the outlook was upgraded. So I think buying Bega on a dip, so maybe somewhere between this 5 to 5.25. So if we see a softer day or two, and you can pick the stock up at around that 520 level as a target, I think that would be good buying. Brambles, we like this, so buying this now at around 1050, comfortable, and I've been highlighting that on the blog. Illumina, just flagging there, supported around that 150. Medical Developments, not doing too much there at the moment. Orica supported around $17, so comfortable owning that. Oceana Gold, has already covered that earlier, but that's under algorithm buy signals. Fortescue, support there at around that $17 level. So Newcrest, so again, just recapping what it is that we're doing here. We're toggling through the charts from the blog post for the last 30 days. So these are all companies that have been tagged on the blog, which capture, for the most part, all the companies that we're holding in the portfolios that we manage at the moment. So Newcrest, buying there at around that $30, moving up. We look at the positives. We've got, it's under algorithm buy conditions, the short-term indicators pointing higher, stochastics moving higher, so you want to be long, whether it's Newcrest, Gold Road, Saracen, any of these gold names, all showing a similar pattern. Beach Energy, oil. One of the interesting things to think about with oil is that if there is any recommencement to international travel next year, we're probably looking at a low point in oil this side of Christmas. And I think as an investment theme, that's something that's worth pausing and having to think about. On balance, the probability of global travel starting, I think, certainly is increasing. And if I think that would naturally lead to a consensus that maybe the dip in oil at the moment is something that you want to buy over the next month or two. So we'll continue to keep an eye on that. The preference is Beach Energy, or maybe just the Triple O ETF, which is the Beta Share Oil ETF. Woodside Petroleum, it's not under buy signals, but it does look like it's getting down to levels where Woodside's fairly cheap. Cleanaway, obviously we had the issues that came out in the media today around, I think, board conduct and also the resignation of the financial controller. We'll wait and see sort of what further commentary comes out, but for the most part we've taken profit on Cleanaway. It is under algorithm sell signal, so it's been removed from our portfolios. The stock has made a higher high, so this dip down here, again, if we see an algorithm buy signal around this $2.10 level, happy to buy into it. Do like the long term thematic there behind Cleanaway. Altium under sell signal, not doing there at the moment. Lendlease under sell signal. Lendlease is an interesting recovery story if you're able to sort of look past the next 12 months. Car sales up against resistance there, so a lot of those tech stocks still a bit cautious on. The XJO index, so for the moment it feels like the market could have a bounce higher over the next few days, and we'll revisit whether at the Nasdaq level it can trade back above that 10-day average. But I still suspect that we're under a resistance level that's not likely to be sort of traded back through as a function of just those valuations in the US. Telstra getting a little oversold down here at 280, so expecting that to bounce high. So don't mind Telstra and TPG at the moment. Ampol, again, under sell signals, so we normally wouldn't be buying anything that's under sell signals, but Ampol's starting to look at good value back down around that $24 level. And then TPG. So that was toggling through the recent blog posts. Now what I wanted to do is just move into the ASX 100 watch list and just finish tonight with a quick summary of the stocks that are under buy signals. So we'll get the percentage gains to the top, and let's just move through these fairly quickly. So we'll start with Northern Star. Just to recap, so we like Northern Star, support there at around $13. Beach Energy looks to be finding support around that 130 level. Newcrest, our preferred gold exposure, moving higher. Short-term indicators support it, as is the case with Saracen. Fortescue, support there at around $17. Orica, support at $17 as well. Cube, now under buy signals, and support there at around that 260. I'll update you on the fundamentals tomorrow through a blog post. Lumina, we like that at around that 150 level. Brambles, we think that's a buy at 10.50. Westpac, still a bit cautious on the banks at the moment, but watching the sector closely. Ansell corrected from $42 down to 36 and now finding support and moving higher. It is expensive, Ansell, so maybe think about adding a covered call. Ramsay, buy it, sell covered calls. Sydney Airports, we think this is a low point, but hard to get visibility on the earnings. NextDC, not doing there. APA, I think this is a buy at the moment at around that 10.30 level. Spark Infrastructure, not doing there, but just highlight that Spark is under buy signals, as is AusNet Services. NIB Holdings, still cautious on these health insurers, and rightfully so. We've seen them move lower. Sonic Healthcare, flagged this on the blog as a buy, and at around that 30, back up at around 33. Sonic's probably pretty close to full value, so selling covered calls, something to think about. Coles, buy on the sell-off there, and think about adding covered calls if you're trying to drive income for your portfolio. QB Insurance, we've generally been avoiding these, not just health insurers, but general insurers as well. But QBE is something that I'll cover a bit more on the blog over the next few days. Dexus, not doing there at the moment. CSL, we're comfortable buying that at the moment and selling calls. Wesfarmers just flagging the correction from 50 down to 45. You can see that I've created a fairly wide band there from say $40 up to $45. So it might be a transaction that you think about entering into in two different entry points. ASX, we're waiting for a little bit further correction in that lower, but we like the fundamentals there. ResMed waiting for that to move a little bit lower. A2 Milk maybe within $1 of finding support there. JB Hi-Fi correcting lower, and we're waiting for the buy signal, in Afterpay, and there we are to start. So I'll finish tonight with a quick look at the XJO. Actually, before I do that, let's look at a couple of ETFs that I've been posting about on the blog. So I'll just come down here and go into the watch list. So the VBLD, which is the Vanguard Global Infrastructure ETF, I like this at around this $53 level. That looks good long-term value. GDX is the gold ETF. WDIV is the S&P Global Dividend Fund. This is the other one, so the Cure ETF. So I've flagged this on the blog a few times. I think we're getting pretty close to a level here where this starts to find support in the US market. We quite like the look of some of the biotech stocks in the US, and that should feed through to this finding support in the coming weeks. XJO, just to finish on tonight. So under resistance, still there at 6,200. Mindful that the Nasdaq's corrected 10%. Could we get a bounce for a day or two in the US? Yes, possibly, but we still think that the underlying issue of high PEs and low earnings growth hasn't been addressed, and therefore we're still cautious on allocations and lean towards more healthcare, telecommunication, and select industrial companies. Thank you for listening in, and I look forward to speaking again next week.